Hello everybody, welcome to my new trade recap of last week. So I had a minus 0.85%. So I took a lot of trades, 8. I was testing some trades also which I could take because I have now a smaller trading account of 50k instead of 200. I'm having now this new week, that upcoming week, I will have a new 200k with that 50k to test some things out at this 50k because I have different backtesting files that I had, and yeah, I want to test it on the 50k instead of the 200. So that's why I took also more trades this week on a 50k. So yeah, we start with GBPJPY. So what I was looking for on the weekly, we're still clearly very bullish, but what I didn't take in count was that we had a FIB completion here. So we had here a FIB completion from this low till this high, minus 680 was touched, and you saw this was a massive bull run. So and at the end of this week's, the price was or the weekly candles were closing smaller. So there was an indication already, okay, the price is having here some stable price action, and then we had that indication of bearish candle as an indication. So then I was still looking for that buys, but instead of that, after that bullish run, we needed to know that we can have some correction because we had a very big impulsive move, and after that the price will have more likely a high chance to that we have corrective nature after that impulse. So that's the thing that I saw it, but I didn't handle to it. So I was just looking just too bullish, too biased for the bullish setup. So what I did here was on a daily. So on a daily, I saw just this first leg, second leg, third leg. These are the same highs. This is the bullish M. Within that same highs, same lows, I went to these daily lows here from that bullish M. And then I drew my daily white zone here, this daily white zone. And then we went to a 4 hour and we had a pattern. So this pattern was the first leg, second leg, third leg, bullish M under a previous lower high. My trade was set here and we went to the downside because we had that FIB completion after that bull run on the weekly and we could expect some correction. So, and that's why we went more to the downside, and now we can potentially make that shoulder 1 head, shoulder 2 here from more downside momentum to make that correction to the downside. So that's why. So then use that ZAR, USDZAR. So if I go on the weekly, I was looking for that long. This was a very good setup because it was looking very nicely. We have this bigger bullish M, as you can see. This is our bigger bullish M. And yeah, this was the bigger one. Then you have the smaller one, first leg, second leg, third leg. It was coming back. You had your FIB from this low till this high. And then you have in between the 61.80 and 78.60 that it reversed from there. We had that weekly bullish candle close there. And yeah, I was looking for more upside momentum, but we didn't do that. So just a good setup on the weekly. And then I went to the daily. So I will delete this FIB. So I went to a daily. And what I saw on the daily was we had here this bullish M. First leg, second leg, third leg, fourth leg going back as a new trend line holding the price up. Very nice for potential more upside momentum till a daily minus 27. So yeah. So then I went till the 4 hour, and what I saw on the 4 hour was we had here our shoulder 1 here, had shoulder 2, and then if I refresh this page, so we had here our shoulder 1, head shoulder 2, and we didn't accept this pattern, so we went to the downside. So it was a trade followed by the plan here, so nothing to blame about that. So minus 1% loss from that. Then Euro AUD. This was a very nice trade actually. So Euro AUD was a liquidity zone trade because on the weekly we were still bullish. So we had this bullish M went to the weekly lows. We had here this fake out here, and then we had here these weekly highs from that smaller bearish W here within that small shoulder 1, head shoulder 2. And yeah, we went to the weekly highs where the banks and institutes like to take some liquidity from, just above that. And then we went to the downside till this weekly buying zone, the potential shoulder one here, had shoulder two, where we took some liquidity for potential more upside momentum because the trend is still bullish. So that's why. So when I looked at this weekly liquidity zone on the daily, you could see, okay, we had a very big push to the upside. We could had some correction. So we could have some correction for potential more downside momentum, potentially till the shoulder one, had shoulder two, but we had here our weekly buying zone liquidity, where we must take some partials out. So I went into the 4-hour, my weekly reverse point line was set. So like this, weekly reverse point line was set here. And what I saw was we had here our, for our reverse point here, previous high. This was the high, previous high, and then we had here a small bearish W also. And then went to the downside, and we hit here then that first take partials, and then the second take partials here. So that's why I took it fully out here, because we had here our weekly liquidity zone. So I took everything out, and this was a 3.2% trade for me. So this was nice to see. So very nice. So then EURCHF. If I go to the weekly, what can you see on the weekly? The only thing I had here was, okay, if I look short term, we are making lower lows and lower highs. So as you can see, we are making here this bearish W pattern, this also this smaller one. So you can see this smaller one also, the FIB descending trend line holding the price down. But I saw this as a smaller bullish M, but instead this was not a clear higher low. And that's why I took here my weekly reverse point liquidity zone. But actually it was this one, because this was a clear low and this is the high. So there I was a little bit confused from, okay, do I take this one or this one also? I was already setting this one also, but yeah, I was also counting this one as that smaller bullish M, higher low here, but this is just one low high. So that was a mistake I made there. So then I went to a daily. The daily was impulsively going to the downside. We were going bearish because this was our high, low, higher high. We're breaking it here with this lag. So we were indicational bearish. So I was potentially taking a buy for that reversal that could play out. Shoulder one, head shoulder two here. And within that smaller bearish W that can act like a magnet, because we have here an IC between all the red candles. You have one blue candle. So the price likes to come back till these zones. So that's why I wanted to take a buy, but yeah, the weekly was not that clear, so that's why I don't needed to take that trade. So on the 4-hour, you could see on the 4-hour it was also not the clearest, because on my big testing I had not a lot of screenshots about that, because if I zoom in, you can see it's just this one is a blue candle. So this one was our low, new low. So this was our previous low, and then we had to close above it. So I took my limit on that 4-hour reverse point for potentially more upside momentum, but we went to the downside. So from that point, we had that 4-hour bullish candle close above that 4-hour reverse point, blue candle here. Then I could take my limit. I just placed them into the downside because the weekly wasn't clear and the 4-hour is not also that clear candle close also. So that's why this was also a loss for me. Then USDCAD. USDCAD was a good trade. Yeah, it was not the highest potential trade. It was good, followed by the daily zones, but on the weekly, yeah, we are bearish on the weekly. We had this shoulder one, that shoulder two, and followed by that, yeah, we are in this major bearish W. Within that, this bearish W, within this first point of structure that acted like support, which became resistance. So that's why the sellers kicking in. So it was a lower potential trade, of course, to take. And the only thing we had with us was this weekly bullish candle close, but it was already reversing from this zone, supply demand zone there. So then I went to a daily, and on the daily I saw, yeah, we have here that bullish M fake out. So we closed, no, we just not closed below that. It was just a close of this. So it was a bullish M just only. And what we had here was we just didn't close above this black line fake out zone, and we had the diesel. So we had the diesel here like this. We had our first candle, second candle, third candle, blue candles. On the fourth candle, I could take my limit to the upside potentially for that 4-hour TP here, but we didn't pull back to that zone and we went to the downside because we had that low potential weekly trade. We had the weekly zones against us, so that's why this was a 1 in 4 criteria, but I wanted to potentially take this on my 50K account. On my 200K, I will not take such kind of trades. Then GBPCAD. GBPCAD, on the weekly, I wanted to take that weekly liquidity zone from that weekly highs because we were bullish. You have here this bigger bullish M, then you have here also the smaller one. So yeah, I was guessing, okay, if we can have some liquidity on that weekly highs, potentially going back to the downside and then going back up. So then I went to a daily, and on the daily, we were very impulsive. We had not a retrace candle. I don't need to have that for now. On my backtesting, it says it's okay to take such kind of trades for now. So what I had was previous high, now we had a new high, and now we need to close below that, and then we could take our limit. Candle was opening here, and then we could take our trade to the downside, which it didn't play out because we already took some liquidity from this bullish M here, this IC low here. That's why I went to the upside. So that's a case that's more dangerous also to take these kind of trades if we have that 4-hour buying lows from that bullish M that we took here, and then we went to the upside. So that's a reason that I also had a loss there. Then USDJPY on the weekly, what I saw, this was also loss. On the weekly, we had a very nice bullish M. We were at this weekly lows, weekly liquidity zone lows. So I was expecting maybe, okay, we are in a bullish trend, we have that pattern, we are the weekly lows, we have all this criteria with us, only the candle, previous candle was against us, no problem. And then I went to the daily. Daily was just impulsively going to the downside. We were at this weekly lows. Then I went to the 4-hour. And on the 4-hour, we had then our previous low, new low. Then we had a close above that, and I could take my limit here, and we touched it. And yeah, we went just to the downside. Then we went back up. So that was a trade followed by the plan. In my case, this was clear enough for me, this trade. So this was by the plan. And then EURJPY was also a very nice trade because if I go on the weekly, you could see on the weekly we had that very big bullish bull run, and after that we received that weekly bearish candle. So I could speculate on that pullback. After that impulsive move, we could have a pullback because the sprinter got tired. We have, I guess, also that FIB completion from the low here to the high, minus 27. So also take it from here, minus 27 here also. So we had the FIB completion, and we had still some room for that first point of structure here that could we touch this first point of structure, this resistance that could become support, and we had that candle with us, so we could go to the downside. So I was just taking that buy first, because why was that? Because we are indicational bearish. We have that shoulder 1, head, shoulder 2. So we speculate, okay, we just need to have first that head and shoulders because the market is indicational bearish, not confirmational. So it needs to first complete that head and shoulders, FIB completion here, or potentially make then that bearish W, and then we can trade these corrections. So that's why I wanted to take a buy, and we had that chase candle also on the daily bullish candle as an indication. So I went until the 4-hour, and on the 4-hour we had a nice pattern, reversed pattern, shoulder 1, head, shoulder 2. We went to the upside, took some partials, 1/3 out at the 4-hour minus 27, and then I took everything out on the minus 68 here for around 3.2% in total net gain on that trade. Because yeah, I was running also minus 3 or -3 and a little bit more. And that's why I took everything out and I ended up with minus 0.85% that week. So this was my trade recap of last week. So I hope you liked it, and I hope you will look for next week, and I hope you have a nice training week also. So have a nice training week, everybody. See you next week.